99% of accidents happen because of human failure. It's not technology that fails. It's not breaking tires or, let's say, breaking engines or so, but it's human error that leads to these accidents. So we can avoid them.
I'm
You
okay.
good? You good? You
A little
enjoyed
bit
it?
nervous.
Yeah.
I thought I'd get used
Did you
to
enjoy?
it.
Did you enjoy our first episode, which was actually episode 0, right? So let's say
Yeah.
the intro to the intro.
Exactly. The first smile.
Yeah,
Yeah.
it was the first mile. It was the first shot. It was our first actually appearance in public together.
Yeah.
Yeah, as
That's
a
true.
anchor woman and your guest, I guess.
I think it's the other way around.
It's the other way
I
around?
think I'm the guest and you're the anchor man here.
Yeah. Let's let the audience decide who's who. So important is that you're Yasmin. You're here.
Yeah.
You're awesome. You're wonderful. And I'm Harald. And today we're talking about
Insurance telematics. So that's the theme for our episode 2. And I'm really looking forward to this episode because we're going to cover really cool things, right? And
Yeah,
also
we're
play a
covering-
game.
Yeah, we'll play a game and we'll talk about what is insurance telematics, not only about insurance telematics, but what it actually is.
Yeah.
And I have to tell you a story that you didn't know, and I kept it as a surprise. You know that I came up with the name insurance telematics?
No, I did not know
it
that.
was not even an industry when we started working in this field. And,
Really?
I can prove. I can prove it because we own all the domains. So if you go to insurancestelematics.com, it's rerouting to our company. So
So if I check now,
if you check now,
Okay,
and everybody
cool.
in the audience checks now, and we have everything. We have insurance telematics, insurancestelematics.com with the dash, without the dash.
cool.
Yes.
And drive safe and save, right?
Yeah,
That's
no,
also-
many people stole this or borrowed
Yeah.
it or just came up with it.
But you're the OG.
Yes,
Yeah.
yes, I guess.
So what really is insurance telematics? Where do we even start with this theme?
So let's break it down because I'm the inventor of the term. So I need to talk about what it means. So let's talk about what is insurance. Let's break it down. What is
Okay.
insurance? So insurance is more important than we think. We covered this lately, but let me repeat that insurance is actually everywhere. You're
Yeah.
insured. Your life is insured. Your health is insured. So if you have an accident, you get sick, insurance companies pay for it. If you have a car accident, which I hope will never happen, our homes are insured. Our business, our office is insured.
Yeah.
If I hurt somebody incidentally, not willingly, we're insured. My dog is insured. So everything's insured. So insurance basically everywhere, and insurance is also incredibly important in today's economy. Did you know that insurance is basically the biggest lender of money to economies and governments?
Really?
Yeah.
Not
So-
banks?
Yeah. So about 20% of government stocks in the EU are held by insurance companies.
Wow.
Yeah, and
I had
about-
no idea.
Yeah, and about 12% of assets under management are from insurance companies
Wow.
because they use the premium income in order to invest. So they're basically a big, let's say, they're giving guidance to economy. So
Yeah.
they're the ones or one of the industries who are deciding where to invest and what are the technologies that are coming up next.
Yeah.
That's incredible. And if we talk about numbers, and I wrote it down because I forgot, but when we talk about 12% of global finance assets, that's about $24 trillion.
Wow.
This is about $24,000 billion. So this is a lot of money.
Oh my God. So insurance isn't just like some boring topic. It's actually a huge part of our economy.
It's a huge part of our economy, and it's on the bleeding edge of technology because whenever something new comes up,
Yeah.
so let's think about the latest AI trends. So that are now only coming, let's say, into gear. Like we were seeing models that are, let's say, going insane. New risks evolve. And
Yeah,
insurance
of course.
companies are the ones who will be asked to insure these risks. So insurance is incredibly interesting because they touch basically everything. They're influenced by geopolitical situations.
Yeah.
They're influenced by climate. They're influenced by our decisions. They're influenced by basically everything.
So the telematic part of your invented term, what is
Yeah.
that about?
So telematics evolved over time, but what stayed the same that with telematics, insurers have the opportunity to interact, or not only telematics, but with similar technologies, insurance companies have actually the opportunity to interact with their customers. So what does that mean? So your insurance contract, and I'm sure you don't even know where you are insured because it's somewhere in a drawer, it's somewhere in a folder. So it's not that you take the contract out every day. So it's a piece of paper that you only pull out when something bad happens.
Yeah.
So, and telematics changes this perception by incorporating real life behavioral data into their proposition. So what does it mean? When I know where you are, so I know your location, if I know your mobility behavior, so whether you got there with a car, you got there with a bike, walking, public transport, and if I know environmental situations like the weather conditions, traffic conditions, etc., I can be very valuable to you. Very valuable. I can talk about your driving behavior, and I can give you hints and coach you to become a better driver and a safer driver. And we talked about that last time, that 1.2 million people die every year in road accidents, and about 20 to 50 million, we don't know the exact numbers, are injured in road accidents. So it's really important because 99% of accidents happen because of human failure. It's not technology that fails, it's not breaking tires or let's say breaking engines or so, but it's human error that leads to this accident. So we can avoid them. This is what telematics basically does. So it offers fair pricing. So, and this is what I'm going to show you in a nice game we're going to play later, how insurance can become fairer in pricing. It gives you insights into your driving behavior. So we can understand what is dangerous that you're doing. And this is not only the simple ones, like you're driving too fast, you're using your phone. So everybody knows that this is dangerous. But for example, if you avoid ultra short trips, that increases the likelihood of not having an accident extremely. Because 25% of accidents happen in the first couple of minutes.
Really?
So, yes, 25%.
Why is
of accidents.
that? Do we know?
Well, they're honestly speaking, we know the fact, we don't know the reason. I have a hypothesis on it, but we have to tell everybody this is a hypothesis. So let's do an example. 5 trips of 5 minutes each versus 1 trip of 25 minutes. With the 1 trip of 25 minutes, you're doing 2 parking maneuvers. So you're parking out your car, parking in your car. So with 5 trips for the same, let's say, duration, you're doing 10 events, let's say, 5 times, let's say, getting your car out of the parking slot and into the parking slot. So this is the one. The second, there is, in the beginning of a trip, we mostly not focused, we're not concentrated, okay, because we're, let's say, we know the car, we know how to shift, getting into the flow. So this could be a reason. Then there's a third reason, is that you mostly start a trip in environments that you know. So you start your trip at home. So you know your neighborhood, you know the streets, you know everything. So you're not that conscious. Everything runs in your secondary system, so you're not focused. So you basically don't remember. If you do the same thing over and over again, you're not that focused.
Cognitive biases, right?
Probably. Yeah. So this is it. Then emergency response. So telematics can help in case of emergency. It can detect accidents. We can incorporate a push button in a hardware or in a smartphone that calls for help if it's needed. So this is the one. And risk prevention. We can, let's say, proceed or foresee whether where you will be in the future, like if you're driving to the office every day in the morning, and we get a weather alert that there is icy road expected in the morning, we can warn you and tell you that probably work from home or let's say use public transport to get here. And last but not least, personalized offers. So we can offer you smart things when you're on the road. For example, we can offer you travel insurance when you're at the airport, at the international terminal. So it's endless. If you can think it, you can build it, basically.
Wow, that's really cool. So insurance companies and insurers in general can really benefit from integrating technology into their business in many different ways. So you mentioned the customer touch points, you mentioned the risk prevention, and all in all, it's life-saving.
Absolutely. Absolutely. It has an impact on the customer relationship. It has an impact on customer lives. It has an impact on customer lifetime. It has an impact of, let's say, upselling. It has an economic impact.
Oh, really?
On insurance company. Obviously, if you stay longer with the insurance company because they gave you valuable insights and you're valuable, you're not changing your insurance companies because of $20 a year if you had a good experience. Right?
Obviously.
Okay, for convenience reasons.
Yeah.
And if I send you a message and say, hey, your car is parked in an area where we're expecting a hailstorm, you park it in the garage and there is actually a hailstorm, this is much more valuable than saving like 30, 40, 50 bucks a year, right?
Of course.
Because, I mean, there's a lot of hassle involved with accidents and with, let's say, with damage on the car, it goes to a repair shop, you need a rental car, you need to go public transport. It's just extremely inconvenient.
Yeah. And we've actually seen these results, right?
Absolutely. Absolutely. So we see increased customer lifetime, we see higher customer satisfaction, a higher likelihood of buying products or buying other products, being a more loyal customer. That's extremely valuable. And we see a huge change in risk, which I'm going to show you with the game.
Cool. Do you want to show us the game now?
Yeah, absolutely. So let me take my laptop aside, and I brought play cards for the both of us. So let's play poker. So I will give you 2 cards, and I will take 2 cards myself.
Okay.
Okay. And then we put 3 cards on the table. Actually, we put them face down. We don't know what's in there. This is important. We don't know what's under these 3 cards. So when I look at my cards, so I have 2 cards, you have 2 cards.
Yeah.
Can you pick up the cards and tell us what you got?
So I actually got a queen and a king.
Okay, that's awesome. So statistically, this is actually a good hand.
Yeah.
So your likelihood of winning is relatively high. Okay, so let's assume that the one card represents the person, and the other card represents the car. Okay. So let's say the person is 35-year-old woman.
Okay.
And let's assume that the other card, the king, is a decent car. Let's say a Volkswagen Golf, 90 horsepower or whatever. Okay. So this is a sure game for insurance companies. They will say, okay, this is good. So let's take a look at my cards. Okay, so I have a 2 and a 7. So this is basically the worst hand you can have. Okay, because you will never get to a flash full house or whatever. I'm not a poker player. I just use it for the sake of this experiment. But in reality, this 2 represents a young driver.
Okay.
Okay, and the 7 represents a sports car.
I mean, if I was an insurance company, I'd definitely choose this person to insure instead of that person.
Absolutely. And you might be right in, let's say, a lot of the cases.
Yeah.
But if you look at how insurance works, you will understand that the profit margin, which is valued, which is called combined ratio. So it's the premium written minus the expenditures you have on losses and on administration, is always close to 100. So 100 means that I spend the same amount of money that I earn in premiums. So in Europe, for example, we have insurance company with a combined ratio somewhere between 90 and 105, let's say.
Oh,
so in the UK, it's a little bit higher. So, but if you take an insurance company with a combined ratio of 95, it means that they are spending 95% of their income. So their profit margin is like 5%. So every little inch we can tweak in this mathematics has a huge impact on their profit and loss.
Of course, yeah.
Okay, so if I knew what's under these 3 cards, I might be more educated in my guess, and I might be more educated whether I should play the hand or I should just drop the cards, right? So let's take a look. So what we have here is we have another 7. Good for me. I already have a pair, okay? Let's look at this. We have another 7.
Wow.
I already have a triple, or whatever it is called in poker. I don't know. And another 2. So this is awesome, actually, because I have a full house, right?
Yeah.
I have 2 2s and 3 7s, and you...
I end up with nothing.
You have nothing. So obviously we didn't put money on the table. But what I want to show is that these 3 cards are basically driving behavior.
Okay.
It's like how often I drive, where I drive, and how I drive. Because probably the 35-year-old woman is a very distracted driver because she's doing a makeup while she's driving, she's having a lot of phone calls, checking her WhatsApp, whatever, and she's driving a lot.
Yeah.
And probably my young driver, which won the hand, is a very decent driver. Is very careful, doesn't do any phone calls, doesn't speed, etc. So this is definitely the better risk. So what I want to say is that understanding driver behavior and driving style is extremely valuable for insurance companies to understand whether this is a good risk or a bad risk.
Yeah.
And in my case, without telematics, this young driver with this sport car, if he gets insurance at all, but he would pay a lot.
Yeah, definitely. He'd definitely pay more than the 35-year-old woman
Absolutely.
reckless driver.
Absolutely. So this is the poker game, and I hope this was illustrating how important it is to understand more about what actually happens with the insured asset, which is the car.
Yeah, I mean, it's really enlightening to see how driving behavior can really optimize insurance decision making. And I think that also, well, we spoke about technology earlier, and maybe we can dive in a little bit more into that. So how is this data even collected, and what do you do with this data after?
Absolutely. That's a great question, because we need to understand where people are. So we need some kind of location device.
Yeah.
So we need GPS or other means of location devices. We need to transfer data. So we need, let's say, Wi-Fi, we need GSM, etc. And we need sensors to understand the behavior. So today we have basically three types of telematics devices, which are black boxes that are installed in cars, and they have all the necessary, let's say, physical equipment on board, and they communicate with a backend of a telematics service provider and send the data over. This is very invasive, and it's very limited to the car.
Okay.
So because it only works for the car. And I don't know if you know, but there is another number I have for you. And this is a number for Central Europe. The average car is used only 4% of its lifetime.
Really?
Yes. So about 50 minutes a day, a car is used on average. And the other 23 hours and 10 minutes is just idle. So there is life outside the car, and we definitely want to know more than just what the car does. Then there are other technologies which I summarize in hybrid devices. They can be dongles, so little adapters that you put in the diagnostic port and they communicate with the backend, or let's say tags that use your smartphone as a communicating element with the backend. And this is the area where I'm very focused in, is smartphone telematics. So we use a user's or a customer's smartphone with an app that collects the necessary data, sends it to a backend, obviously taking care of the privacy of the customer, and then helps insurance companies to provide all these kinds of services.
So you're telling me that with a download of an app, so just a click on your smartphone, you can get all these benefits and really help people at the end of the day and optimize risk?
Absolutely, because think of the following. So you have a location device, right, on your smartphone. This is why you can navigate with your smartphone. You have Google Maps, or you'll use Apple Maps, or you use Waze, or any other map provider. You obviously have a communication device because you communicate over voice, but you also use data, you use Bluetooth, Wi-Fi, and the cellular network. You have sensors. So I don't have a phone here, but if users can try this out, if you bring your screen from portrait mode to landscape mode, actually your screen will turn if you didn't lock it. This is an accelerometer, so it measures gravity.
Okay.
And we use this sensor, for example, to understand, let's say, motion behavior, like how you're accelerating, how you're braking. We understand when you have an accident. So the smartphone basically has everything that hardware has and external hardware has, plus, and this is the beauty, it has a user interface. It has a screen, and I can communicate with the customer contextually.
Okay. That sounds really, really cool. I mean, amazing. I'm happy that we can finally share this with the world, really, for them to understand what insurance telematics actually is.
Absolutely. And it's cheaper. I mean, it's not only if you, in former times when I started with telematics, we had to install boxes in cars. And this means we had logistical costs, we had the hardware, we had SIM cards, we need to get it in the car, we need to run it, and so forth. So repairs. So there's a lot of hassle if you use hardware. Even now, when you
course.
have tags or when you have dongles, it's a hassle. So it's much more convenient. And you have so much benefit from smartphone only, and you can even say whether I'm driving with my car or with another car. So it's really exciting what technology can do.
Oh, wow. We can even tell which car you're driving with.
Absolutely, because think of the following: when you're driving your car, you're connecting with your Bluetooth device. You're connecting with your infotainment system, with your car stereo. So, and we use this Bluetooth MAC address, which is the identifier of your car's infotainment system, to understand whether it's your car or somebody else's car, which is important for insurance companies because they are insuring not you as a person in car insurance, but they're insuring an asset, which is the car.
Of course. Wow. I mean, sounds amazing. Is there anything else maybe we could add regarding how telematics improves the process of pricing, so underwriting?
Absolutely. So if there are many models out there how insurance companies can use telematics, and one is try before you buy. So just let your customer, your potential customer, let's say, drive and then look whether he or she is a good driver or not. And you see this by, and we'll have an episode specifically on scoring and on driving behavior and learning what actually makes somebody a good driver versus a bad driver, or high risk versus a lower risk. But essentially, it's important that you understand as a customer where your risk is, because you can only fight the problem you know. Right?
Yeah.
You can only attack the things that you're conscious of like distracted driving. So everybody thinks, well, I have a good reaction. If you look at a text message or WhatsApp or Facebook just for a couple of seconds at 50 kilometers per hour, you're actually making the distance of a football field.
Really?
Yes. So think of a child standing in the middle of this football field. So we do believe that we have a good reaction and it doesn't matter, and we have one eye looks at the phone and one eye looks at the road. But in reality, that's not the case.
Yeah.
And we'll also talk about this in more detail. But when you just drive just 1 kilometer per hour, just 1 mile per hour more, let's say faster, you might cross the distance of a couple of meters, even if you're driving slow. So if you're driving, let's say 30 kilometers per hour, like slowly under 20 miles per hour, you will go with your reaction time, you will go like 3-4 meters more when you drive 1 kilometer more per hour. So think of stopping in front of a child and going through a child 4 meters. So this is incredible, right?
Yeah.
And we need to be aware of this.
Of course.
And this is one thing insurance telematics does. Besides the fact that we can offer you right products at the right place, like travel insurance at the airport, or we can offer you sport incident insurance at a ski resort.
Yeah, all whilst making sort of the interface professional, but also fun for the customers, right?
Yeah, absolutely. So it's creating this interface in the first place, because nowadays with a normal insurance contract, you don't have an interface. Well, insurance companies have a website, or they might have an app where you can report a claim, or you can watch your contract. So the question is, how often do you have a claim? How often do you watch your insurance contracts? And when do you do this? So you do this when you're shopping for new insurance, right? When you want to compare prices, or when something bad happens. And the idea is to give insurance companies actually the instrument to create a customer relation, to create an experience with them, to actually help them in their daily lives. Because if you look at it, customers and insurance companies have the same, let's say, objective to that a claim doesn't occur.
Yeah.
Okay. So nobody wants to have a claim. Nobody wants to die. At least the people I know. So this is the important thing.
Yeah.
And for insurance companies, like an endless opportunity. It's like talking about what can I do with my CRM, or what can I do with Microsoft Excel. Well, you calculate whatever you want, you write whatever you want, you use it for your sales process or whatever.
Yeah.
And it's the same with telematics. So you know about driving behavior, you know about the mode of transport. So you know whether somebody came by car, somebody came by, let's say, public transport, is doing a lot of biking, a lot of walking. So telematics can be and also is used in cases outside of car insurance, like for health insurance, for example, where people can get benefits if they're, let's say, behaving in a healthy way.
Yeah.
Yeah.
Wow. I mean, that sounds really amazing. I am really happy with the outcome that we have achieved because I feel like we covered a lot of things in a short amount of time. I mean, short relative to my sense of time. And I hope that the audience also kind of got an idea of what insurance telematics really is and the impact of insurance telematics, the impact that it has and the impact it can also have. And I'm excited for our next episode. What is it going to be about? Tell us.
We will be talking about artificial intelligence.
Wow.
And we'll be talking about how to use it and how it's used today. And I will bring you 2 examples about how we use artificial intelligence in insurance telematics, which I guess is exciting.
Yeah. I mean, anything to do with AI kind of right now is something huge.
Yeah,
like,
it is.
You read the news, the first thing you see is AI.
Yeah, absolutely.
Yeah.
And it's a huge thing. It's changing humanity. It's changing the way we work. It's changing the way we live.
Yeah.
And it's every day is a new day. Every day is new news. And we might be outdated the day where we send this podcast episode, but we hope we're not.
I hope we're not. I'm sure we won't be. We'll always try to cover the most futuristic topics, right?
Absolutely. And we'll stay on top notch of technology also in the years to come.
Exactly.
So even if you watch this podcast in the future, this episode, it will hopefully not be outdated.
Exactly. Thank you for listening, and we'll see you soon.